All right. Welcome back, everybody. Today we're doing a deep dive on 3 stocks that are predicted to bounce back in 2025 after kind of having a rough 2024.
Yeah.
We're looking at an article by Rick Munari's on The Motley Fool. So
Oh, okay.
let's jump in and see if there's anything good here.
Yeah, sometimes it's interesting when you see these companies that are doing well or in sectors that are doing well and then they're not doing well.
Right.
So it's kind of interesting to look and see what's going on.
Yeah, so the first one I thought was interesting is AMD,
Okay.
Advanced Micro Devices. And so, they're a big player in the AI chip market.
Right.
Everyone's talking about AI. It's like the hot new thing.
Mm-hmm.
And their stock is down 11%.
Yeah.
How does that even make sense?
Well, I think it's a matter of the market kind of looking at things short term.
Okay.
So their data center revenue, which is the AI stuff, is up 122%, which is crazy.
Wow, that's huge.
But then their gaming and embedded segments,
Mm-hmm.
they're lagging. So that's where investors are getting a little spooked, I think.
Yeah. Oh, so it's like part of the business is killing it and the other parts are...
Yeah, kind of
Like
flat or slightly down.
So is this, even though those other segments aren't doing as well, are they still growing as a company overall?
Yeah, their business overall grew 22% in the last quarter.
Wow.
So it's, AI is really impacting their bottom line.
Okay.
And 2025 looks even better. They're projecting 27% growth.
So if we're an investor looking at this, what's the takeaway here?
I think the question is, are those other segments going to pick up?
Okay.
Is it temporary or are there some bigger problems?
Right.
And also, how sustainable is their dominance in AI?
Oh, right, because there's other...
NVIDIA is a big competitor.
Yeah.
So there's a lot of things to look at.
Okay, so it's not just AI is hot, so let's buy AMD.
Right. You really got to look beyond the headlines and understand the business.
That makes sense. Okay, well, let's move on to the next company, which is Comcast.
Okay.
So Comcast, their stock dropped 10% because they announced that they had some significant broadband subscriber losses.
Yeah.
So what happened there?
Well, it seems like a perfect storm for them. They had the hurricane disruptions.
Oh, right, yeah.
But the bigger issue is, the cheaper wireless internet options that are coming online.
Oh, so they're losing customers to these.
Yeah, so that's putting a lot of pressure on their core business and making investors nervous.
That's interesting how technology can disrupt businesses like that. So
Yeah.
is there any hope for Comcast? I mean, if they're losing their main revenue stream, is there anything good on the horizon?
Well, they have some big potential wins coming up.
Like what?
Wicked, the movie Wicked Part 2 is coming out next year.
Okay.
And they're looking at potentially, billions of dollars from the box office for that.
And didn't the first one do really well?
Oh, yeah. So that's a big one. And then they're also getting $5 billion for selling their stake in Hulu.
Oh, wow. Okay, so they're getting a cash infusion from that. And also, aren't they opening a new theme park?
They are.
Like-
Yeah, Epic Universe is supposed to open in May of 2025.
So that's going to be a big revenue driver, right?
It should be so. It's not all doom and gloom.
Okay, so is it more of a wait and see with Comcast?
I think the question is, can these one-time events kind of help offset those ongoing challenges?
Right. So is it a risky bet or a potential comeback?
It's a tough one, and then you've also got to factor in their dividend.
Oh, yeah.
They've increased it every year since 2008.
Wow.
And with interest rates declining, that 5.6% yield is starting to look really good.
It's a lot to think about. You got the potential revenue from these big events, but then also the challenges with their main business and how they adapt to this changing landscape. It's a lot. Okay, well, let's take a breath and move on to the final company.
Oh.
And this one is in a different area. This is a REIT, Realty Income.
Okay.
Now, this one has an interesting ticker symbol. It's just, oh.
Yeah.
And even though it's in an area that's usually considered pretty safe, it's also down slightly this year.
Mm-hmm.
So what's going on there?
Well, REITs in general, especially retail REITs, have had a little bit of a tough time. And it's mainly because interest rates have gone up. And that means borrowing costs are higher for them, so it can impact their profitability. But with Realty Income, there's a little more to it.
So what is it about Realty Income that makes them a little different?
Well, unlike some REITs that are focused on malls,
Okay.
they tend to pick tenants that are less affected by economic downturns.
Oh.
So, like grocery stores, pharmacies, dollar stores.
Right, people are still going to need that stuff.
Yeah, exactly.
Mhm.
People still need those things no matter what's going on with the economy.
So they're probably more likely to keep paying their rent.
Exactly. And that consistent rental income is what makes Realty Income really attractive to investors.
Okay.
Plus, they have a huge portfolio, over 15,000 properties.
Wow.
spread across all kinds of different industries.
So they're diversified?
Yeah, they're not just in one area, so that helps too.
Okay, and they have like a 98.7% occupancy rate. Is that good?
That's really good.
Okay.
Yeah, so almost all their properties are generating income.
So it sounds like they're doing a good job of picking good tenants and good properties.
Yeah, they're not just buying up anything. They're being strategic about it.
Okay, well, so far it sounds like a pretty safe bet.
Yeah.
But what about their growth potential? I mean, are they just sitting back collecting rent, or are they actively trying to grow?
They are growing.
Okay.
Yeah, they're always looking for new properties to acquire.
Okay.
They're actually projecting a 5% increase in their adjusted funds from operations in 2025.
Okay, can you break that down for me? What is adjusted funds from operations?
Sure. So it's basically a measure of their cash flow
Okay.
from their operations.
Yeah.
So a 5% increase means they'll have even more cash coming in to support those dividend increases.
Oh, right, the dividends. Yeah, tell me about those. I know they're monthly.
Yeah, they pay out every single month.
Which is pretty unique for a REIT.
It is. And they've increased that dividend for over 27 years straight.
Wow, that's a long time.
Yeah, 108 quarters to be exact.
Wow.
So that's a pretty good track record.
Oh.
And with interest rates declining, their current yield is 5.6%, which looks pretty good, especially for people who are looking for income.
So it sounds like if you're someone who's looking for that consistent income stream,
Yeah,
this could be a really good option.
it could be.
But, every investment has risks. What are some of the risks with Realty Income?
Well, one risk is that their share price might not go up as much as like a high-growth tech stock.
Okay.
Remember, they're focused on steady income, not explosive growth.
Okay.
So it might not be the most exciting investment,
Okay.
but it could be a really solid part of a well-diversified portfolio.
Right. It's like the tortoise and the hare.
Exactly. Slow and steady wins the race.
I like that analogy. Okay. Well, we've covered 3 very different companies, each with their own opportunities and challenges.
Yeah.
So what stands out to you as being particularly interesting?
Yeah, I mean, AMD sounds promising, but like you said, NVIDIA is a big competitor.
Yeah.
And Comcast, those revenue boosts sound good, but are they really going to be able to adapt? I don't know. Yeah. It's like they're trying to outrun a wave.
Yeah.
you
Yeah.
know?
Exactly.
But Realty Income is really interesting to me.
Really? Why is that?
Well, in a world that's so unpredictable, I think their focus on stability and consistent income is just so appealing. They've been through tough times before, and they've always come through for their investors.
Right. And they're focused on those essential businesses.
Yeah.
That's really smart.
It is. No matter what's happening, people still need groceries and medicine and all that stuff.
Yeah, it's like they've figured out how to make money no matter what.
Yeah. And as interest rates go down, that dividend yield looks even better.
So it's like they're not flashy,
yeah.
but they're dependable.
Exactly.
And that's really valuable.
Yeah.
Okay, so for our listener today, we've got 3 very different companies.
Yeah.
All with their own path to a potential rebound in 2025.
Right.
AMD riding that AI wave, but facing some competition.
Yeah.
Comcast trying to use these big events to kind of offset those challenges to their core business. And then Realty Income, like the steady Eddie,
Yeah.
consistent income even when things are crazy.
Exactly. And it's interesting how these companies reflect what's happening in the market as a whole.
Right.
You've got the technology innovation with AMD, the disruption in media with Comcast, and then the need for stability with Realty Income.
It's a lot to think about.
It is.
But that's what makes it so interesting.
Right.
It's not just about picking stocks. It's about understanding what's happening and finding those opportunities that fit with what you're looking for.
Absolutely. And remember, this deep dive is just the beginning.
Right.
It's a starting point.
Yeah.
We've had a conversation, highlighted some things to think about, hopefully made you curious.
Yeah.
Now it's up to you to keep exploring.
Okay.
Dig deeper into these companies and decide which ones, if any, fit with your strategy.
Awesome. Well said. And who knows, maybe you'll find some other hidden gems along the way. That's what's fun about investing.
Yeah.
You never know what you're going to find.
Exactly.
Thanks for joining us for this deep dive. And until next time.
Yeah.
Happy investing. It is a lot to think about, but I think that's what makes it so interesting, right?
Yeah.
It's not just, looking at a company's numbers. It's understanding how all these things fit together.
Right. And it's really about what your individual goals are, too.
Exactly. So if you're someone who really values that steady income and that stability, Realty Income seems like a good option.
Especially with those declining interest rates, making their yield look even more attractive right now.
For sure. Okay, so let's do a quick recap for our listeners today.
Okay.
We've got AMD, which, has this huge potential in AI.
Right.
But also facing that competition with NVIDIA.
Yeah.
Comcast, trying to leverage those big events to overcome the challenges in their main business. And then Realty Income, the reliable REIT,
Right.
providing that steady income no matter what's going on in the world.
It's fascinating, isn't it, how these companies show us what's happening in the market right now.
Yeah, like a little snapshot.
Yeah, we've got the innovation, the disruption, and the need for stability all right there.
And that's what makes this stuff so interesting to learn about, right? It's not just about picking stocks. It's understanding, the bigger picture.
Absolutely.
And finding those opportunities that fit with what you want.
Exactly.
Okay. Well, before we wrap up, any final thoughts?
I think the biggest takeaway is that this is just the beginning.
Okay.
It sparked a conversation.
Yeah.
Highlighted some key things to think about. And hopefully made you a little more curious.
Yeah.
Now it's up to you to keep learning. Dig deeper into these companies and see which ones, if any, align with your investment strategy.
I love it. Well said. So to all our listeners out there, keep exploring, keep learning.
Yeah.
And who knows, maybe you'll find some hidden gems along the way.
Absolutely.
That's what makes investing so much fun.
It is.
All right. Thanks for joining us for this deep dive. And until next time, happy investing.